This is the largest performance-related compensation package ever provided to any CEO. $1 trillion in stock options that can't be exercised for another decade. And it goes to show that the accrual of wealth that will be in the AI sector over the next 5 years is going to be so big that we're going to start to create trillionaires. And you might think that anyone who holds and possesses that level of wealth is dangerous. There is more caveats to this, and the requirements in order for Elon to be able to receive all of these 12 tranches that make up this $1 trillion in stock options by the end of the decade is the most important part. And so it's like me thinking about this in the terms of being an investor. If I was to give this company $10,000, they are going to pay me back $100,000, and I just need to pay them $12,000. You think about the amount that you'll make if these milestones are hit operationally in terms of the products that they need to build, from selling over 20 million vehicles to 10 million FSD subscriptions to rolling out 1 million robo-taxis to creating 1 million units of Optimus Generation 3 to getting the EBITDA to over 400 billion, which is the equivalent of all top three Magnificent Seven companies at the moment, NVIDIA, Microsoft, and Apple, and Amazon included in that if you want to swap out Apple. Either way, these tranches are going to be extremely difficult to reach, but if they are reached, it is as simple as this. You give your 10,000, you receive 100,000 by the end of these milestones, and not all of these milestones need to be reached for the speculation to kick in and drive that share price higher. And all you're paying for that 100,000 in return is 12,000. And so I think about the ability for him to be able to perform and do this. And this has been proven in the past. Tranche 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And by 12, you need to be basically 2x NVIDIA's market cap. And if you can create the value of two NVIDIAs, I believe that if you're a CEO who can create that level of innovation and hit total addressable markets in order to actually penetrate to get that market cap of two NVIDIAs, it's two Germanys don't make up 8 trillion, two Frances don't make up 8 trillion. That's insane. So I would say that he deserves to receive that 1 trillion by the time he's managed to 8x the company's market cap. CEOs have spoken fondly of the individual Elon, his ability to will future technologies into existence. You've got the guy as our Einstein, that's Jamie Dimon, the CEO of JP Morgan. Elon is singular in his understanding of engineering and construction and large systems and marshalling resources. It's just unbelievable. That's Jensen Huang of NVIDIA. You've got Henry Ford of our generation, that's Richard Branson. And then you've got finally Peter Thiel, one of the most efficient capital allocators on the planet. My number one rule is to never compete with Elon. I would never bet against Elon. He knows something other people don't. The visualization of the market cap for him to get to the final tranche is basically two NVIDIAs. But all of the tranches prior to that, even the first milestone for him to receive that first 12th of the shares is to get 36 General Motors. And then the second is 29 Ferraris. And then the ninth is 2.5 Googles, and then the 10th is 2 Apples, and then 11th is 2 Microsoft. The incremental step change in these tranches is a massive amount of capitalization and value that he needs to manage to create and innovate. And the final tranche for Elon is to get to a 400 EBITDA, and the amount of value that he needs to create in order to do that is the same as Meta, Microsoft, and Apple combined today. And so when you think about the difficulty and challenge in him creating this value, you realize that if he does achieve this, he probably deserves the trillion that he's going to receive for the value he creates for people who are invested. And this is really important. It shows that of those that would have this same type of performance-related package over 5 years in 12 tranches, the majority of CEOs would fail. And so you look at this, 79% failed to achieve even one tranche. 13% achieved just one single tranche. 7% achieved 2 tranches, and only NVIDIA managed to get 3. Elon is the only CEO who has had a performance-related package similar to this $1 trillion in stock options that he's got now, and he's managed to surpass that he's the only alumni of these CEOs at the top companies that has managed to actually do these operational and financial milestones. Look at the characteristics of his past and how he's managed to perform under these same levels of pressure and with the same ambitious goals, and he's accomplished this. In 2012, he managed to do it. Strategic product development goals, he achieved all 10 tranches. In 2018, he managed to adjust the EBITDA and revenue, and he managed to get all 12 tranches. He did that in 5 years. He got the market cap to 600 billion. And now you think about people who say don't bet against this individual, whether you like him, dislike him, it doesn't matter. The fact is, he will drive his businesses forward regardless of what you think of him and your emotions towards whether he is someone you agree with politically or financially or just in terms of his innovations and his philosophy. It doesn't matter. The fact is that he is someone who will probably be able to capital allocate his way into this market cap, as he's proven in the past he's been able to do it. And this next one is to get to 7.5 trillion in shareholder market capitalization value. That's probably going to be something he'll achieve. And so when you think about the S-curves that create the opportunity, it's EVs, it's FSD robotaxi, it's the energy deployments at Megapacks, Lathrop, and Shanghai, producing 10,000 units each, $5 million in margin a day. And then you've got the AI robots, which is the biggest product to ever hit the market. So in this video, I want to go through all 12 tranches. I want to go through the information that backs up whether this is going to be achievable. And I want to use research that's come from a number of different sources. Cernbacher, AJ, Herbert Ong, Jeff Lutz, Invest Answers. These people have provided me with a lot of information from the content that I've managed to just consume and organize all of this into the milestones that I believe makes this achievable over the next 5 to 10 years. And probably, in my estimate, it'll probably be sooner, by the end of the decade. And that could be an extremely good arbitrage opportunity in terms of growing your investment if you make it at some point this year. So let's look at the overall strategic 12 tranche picture. You've got the market cap milestones, all 12 tranches. You've got the operational milestones and the strategic and the financial parts of that. And that will then unlock each time one of those tranches will unlock 1% of the company, totaling 12% of the shares required to own 12% of this company. This research from New Street is Elon Musk as the CEO and securing him as a CEO worth 2 to 14% of dilution if he's able to return 2 to 8x in terms of the range of value he can accrue to the investor. And each of these levels, it's 200 billion, and that can come from robo-taxis and delivering the cars. Then the extra 100 billion can come from the Optimus robots and the FSD subscriptions. And then you've got 40, 30, and 30. And each of these areas adds to that total of 400 billion of EBITDA. And therefore, when you look at it visually, you can see that actually each of these milestones can be achieved from specific products that they're building and innovating and have an advantage in. And you can see the accrual of restricted stock tranches that he receives after each milestone. And it just equates to this total of 424 million shares, which will give him that $1 trillion in value. At the moment, the top SUVs in China are 4.3 million. The 3-row models are 2.5 million units, and 1.2 million come from national electric vehicles, 3-row SUV. And what I'm trying to say is the market for the new model YL is already massive in China, which is going to expand the TAM. It's going to expand their ability to deliver more vehicles. And they've already managed to pull forward a lot of the Q4 deliveries into Q3. The tax credit being taken away has pulled forward a lot of deliveries. But also this Model YL is sold out in China, and it'll be everywhere. And they'll just continue to ramp that product up whilst also selling their original Model Y, the Juniper, and then also potentially bringing in a compact vehicle to expand the ability to achieve that milestone of 20 million vehicles. And then another element to this is the insurance of vehicles in China is continuing to grow from Model 3, Model Y, Model YL, and this is just continuing to grow cumulatively. And then this really sums up the advantage that Tesla have, which is they have a localized supply chain where they assemble over 85% of their vehicles in the economic zone they're going to sell into. and therefore the tariffs don't really impact their ability to sell and continue to sell their inventory. And then this Michael Dunn insight really paints the picture for how important it is to have a localized supply chain. When you see Mexico's new higher tariffs could really impact Chinese exports, where they export the most amount of vehicles to Mexico. And then again, this will allow for Tesla to continue to grow a little bit more market share as they have that localized supply chain. So I do believe that that target will be achieved. Second target is 10 million active FSD subscriptions. And this is really important research from AJ, and it just shows cumulatively the adoption rate of 5%, 10%, 15%. And if they have an adoption rate of 10%, they get to the cumulative FSD subscriptions of 10.57 million by potentially the end of 2026, going into 2027. So again, based on AJ's research, someone I really trust, extremely prudent, extremely in the know, and extremely resourceful, I would say that this FSD subscription of 10 million will be achieved. Tranche 3, again, increasing in difficulty and execution, but the 1 million robots being delivered. Again, this is something that I believe from AJ's research is achievable because of the amount of tons that are required to make a Tesla vehicle. So if you look at the total tonnage to make the vehicles, it's 3.315 million tons, and the total tonnage to make robots is 0.6% of that at 21,000 tons. The difference in weight means that once they have the final design lock, which apparently they do with version 3, they're going to be able to ramp these up without needing to use as much energy. And once you have the actual final product, it doesn't make it easier to scale. It actually could be a lot more complicated. But once you have that final product, the capacity to expand requires way less energy than it requires to make the Model 3 and the Model Y and any of the cars. The total tonnage of energy required is so much higher, 0.6% of that to make the robots. So I believe that that milestone will be achieved. Milestone 4, the 1 million robotaxis in commercial operation. And the first part of this is Trump's Transportation Secretary Sean Duffy advances the AV framework with plans to modernize safety standards. So the Transportation Secretary is making it easier, reducing regulation, promoting innovation, encouraging car manufacturers to be able to reduce the red tape in order to put these cars on the road. And Tesla have already got a vehicle. They've already got the ability to ramp and scale this vehicle and manufacture it at mass. They've got the network set up. They've got cars that can go immediately into the network that already have steering wheels and pedals. I believe that as Tesla continues to show expansion in the states within the US, they're proving to me that they're able to scale this quite quickly and go wide across the US and then go deep with the amount of vehicles that they can put into this network. Elon's encouraging activation of more regions. He's very bullish and very excited about this. The Robotaxi app continues to climb in terms of the charts when it comes to different services and subscriptions. It's a complete vertical lineup, surpassing Waymo in service area. The downloads on the first day are higher than Uber and Waymo by a colossal mile. Robotaxi by Kathy Wood. On a random Thursday in September, Tesla Robotaxi app downloads cracked the top 10 of all time highest US ride-hail activation days. So even on the busiest periods, Tesla's on a random Thursday releasing this app to everyone who's able to access it in the US, and it was the highest downloaded app when it comes to travel. Tesla can reduce the cost of a mile economically to 22 cents, and they can charge the customer 36 cents and make a 40% gross margin, which just sets them in a league of their own when it comes to the ability to generate cash from this business. And that's just going to allow them to start reaching that EBITDA of 400 billion. They build cars like giant Legos with their unbox process. And when you think about the ability for them to just continue to scale this, it adds to the validity of them being able to make the 20 million cars as well, because these robotaxis contribute to that 20 million cars. So I believe that the 1 million robotaxis in operation, again, will be achieved and soon. Next one is 50 billion in EBITDA. And I guess all of these kind of come into one bracket. The 50 billion, the 80 billion, the 130 billion, all the way up to 400 billion. And a few caveats that I want to mention on this particular point. And one of the caveats to this is that the 6 calendar month trailing average market capitalization needs to be at that point for them to be able to unlock that tranche, which means that the EBITDA has to be sustained, the market cap has to be sustained, and that means that the share price doesn't just spike up and then come down again. It has to sustain in that range, which is important because the EBITDA is going to impact the share price, and the share price is going to impact the investor, and the investor is going to be impacted by the complete volatility of this. But one of the caveats in this performance package is that it's not just going to be met for a day or a week, but it's met for a 6-month trailing average, which is so important. When you think about the 12 trailing months adjusted EBITDA for Nvidia, Apple, and Microsoft, it totals 431 billion. And then the next 12 months totals 525 billion. Tesla needs to try and get to 400 billion, which is equivalent to these three companies, but then has to sustain it for a 6-month average each time to unlock the tranches for Elon. For these milestones to be unlocked, the most important part of this is the multiple. 93.2x is the multiple for each of these tranches to be unlocked, for each of these adjusted EBITDA milestones to be met. And what I take from this is the story is always so important with Tesla. And therefore, there's always a key man risk with this company when it comes to Elon and his safety and his ability to perform. And when you think about this engineer who's managed to scale rockets and reuse those rockets, an extremely difficult engineering task that has never been achieved by anyone, he managed to pull it off. He has a premium when he is involved in the stock and in the company. The multiple for having Elon actually impacts the growth of the market cap because the speculation is massive and the sentiment is massive with this company. The reason this is important is because there's a 300% premium on this stock with that multiple because of Elon and the fact that he invites the story and makes that story real, and people buy into that story before the earnings support where the company is. So again, to finish this off, it's the 12 tranches will take extreme execution and scalability. They are unachievable for most people, for most CEOs, and even based on historical data, there isn't a CEO other than Elon who's managed to do a similar performance package like this twice. You have Jensen Huang, who got close, and he got 3 of the tranches, 3 out of the 12 tranches of an equivalent package for his company, Nvidia. But Elon's the only one who's managed to actually unlock these types of goals and these types of milestones. And therefore, it gives you historical precedent when it comes to having confidence in understanding this company and whether he's going to be able to do it again. I personally believe that he will. Personally believe that the companies that he's building are going to open up addressable markets that will make these milestones quite easy to achieve. And I actually think it's going to be a lot more than this. It's going to go a lot further than this. And a 20 trillion market cap company for Tesla by the end of 2030 is not too wild to actually assume. And the numbers are heavily sandbagged. Could it be relevant? I've got a few charts I want to finish off with, and it's about the volatility of Tesla, how often the stock is at a certain point and how often it trails under its all-time high, and how many days you get large over 10% moves and under 10% moves, and where it just kind of trades sideways. So let's just have a look at that data. The percentage of time it's below the high for Tesla, it's below 5% of the high, 88.2% of the time. 10% of the high, it's 79% of the time. At 15% below the all-time high, it spends 65.3% of the time. Below 20% of the all-time high, it spends 52.9% of the time. And then below 30% of the all-time high, it spends 29.5% of the time. Basically, it spends a lot of its time below its all-time high. And that's why it's so difficult. It's demoralizing. When it hits a new all-time high, it comes down, and it usually spends more time underneath that all-time high. Shows the volatility of this company. This is really important. It's a summary of the daily stock returns, and you think about where it does a big move over 10%, it's only 49 times. And then when it does a move that's lower than 10% in terms of minus 10% or more, it's only 28 days. So these moves where it's highly volatile and some of the biggest moves in the stock happen so infrequently when it comes to the grand picture of this company. And the volatility, the red lines just show how often it goes from its all-time high down to a lower level. And it spends a lot of its time underneath its all-time high. So when it makes a new all-time high, it's not there for long, and that can be demoralizing for the investor. So just understanding why it's a difficult company to own and why it's hard to sometimes set yourself these kind of anchor points where I've had the stock at this level and it's not real. It's going to be volatile. It's important for Elon to be able to get to 29% of voting so he can have full control over this company so that when Optimus robot is scaled in high volume, he has control over how that robot's being deployed for safety, as he's someone who wants to make sure that this is used for ethical and moral reasons to further humanity and help build humanity as we expand into other planets. As crazy as that sounds. And even if he unlocks this package, the amount of tax he will pay is absolutely monumental. It's about $400 billion in total tax he would have to pay if he was to even exercise this 1 trillion. So it's not like he's going to receive 1 trillion. He's going to have to pay 400 billion in order to unlock that in tax. He's already managed to achieve the title of paying the most tax when he bought X. And then this final quote from Hans is, Optimus is AI, that's one of his priorities. AI 5 chip is AI, that's another priority. Number 3 is Colossus 2, AI. Number 4 is AI and autopilot, that's another AI. And then number 5 is vehicle production delivery for AI. So Elon is all in on AI, the sector that's emerging, the sector that's going to continue to grow. So I hope you got some value from this. Elon just bought $1 billion worth of stock, which shows that he has conviction in this company. The CEO of GM Motors, Mary, sold 42% of her position. And the CEO of Uber, these are direct competitors to Elon's company, Tesla, sold 21% of his shares as well. So it shows the conviction that he has buying and the conviction that they have selling. So follow the money. Understand that these tranches are going to be unlocked. Unless, sadly, something happens to him, they'll be unlocked, and his ability to scale, innovate, and execute is like no other capital allocator, engineer, innovator that's ever lived. So try and understand the company, and if you get value from this video, there's other videos about Tesla and understanding that this company could create so much value for the investor over time. Like, comment, subscribe. See you in the next one.